another episode of Ends Podcast. In this podcast episode, we're going to be covering the definition of what is REITs, and then we're going to be going over how I got invested into the real estate market, you feel me, at a very, 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 very cheap price, you feel me? Because, this is Ends, and we talk about making the most out of your current circumstance. Man, everybody got their own way with getting into, these different various markets. I know a lot of people who think about getting into the real estate market. Me, myself in particular, I kind of stumbled across this and did not know exactly that this was exactly what I was doing. You feel me? Until I looked up that this was an actual term, and looked up that this was an actual process that some people do actually take when it comes down to building their portfolios. So, as y'all will see, you feel me, in previous episodes, I am invested into, various companies, and I started investing into stock, and just started investing. I started sharing, and I've been sharing my investment, process and testimonies and stories along this whole path. Pulled up right now, we on bullbaggers.club, and we got the definition of what is REITs. So REIT means real estate investment trust. By definition, a real estate investment trust is a company that owns, operate, or finance incoming producing real estate. REITs provide all investors the chance to own valuable real estate, present the opportunity to access dividends-based income and total returns, and help communities grow, thrive, and revitalize. Quoted from REIT.com. So, these type of companies in particular are companies like New York Mortgage Trust. That is one company in particular that the first company I invested into, which I didn't even realize that was a company that I was, that's what I was actually doing. And I'm paste that on here, and then we gonna go to that real fast, and I'm gonna pull that up for y'all. Shout out to Robinhood. This is actually on my Robinhood account. So we don't go over into last month, not even the last day, because, it's on the weekend. So we ain't really talk about after hours trading. So, this New York Mortgage Trust, over the last month, as y'all see, it's been steadily increasing, especially as we start to move through this whole coronavirus COVID-19 pandemic. But I'm going to scroll down a little bit. We're going to scroll down a little bit till we go down to, all right, so the first time I bought this, so I bought multiple different shares, you feel me? So it's Ends making the most of your current circumstance. We're going to keep it all at 100. The first time I bought some shares, I bought 3 shares at $1.23, and I spent $3.68 buying into the actual real estate market. That's crazy, right? And then we fast forward like almost a month later, I invest even more shares, but this time, you feel me, the shares are going for $2.04 a share. Excuse me. So you you pretty much see an 81-cent increase. You feel me? Like an 81-cent increase in a whole month of what the actual share value was just from owning it. So when I tried to go buy more, you feel me, I had to pay a little bit more per share. So, on sites like Robinhood, they pretty much show you the dividends payout earnings quarterly and what they were previously in the past. So I'm already so if the stock is already going up, stuff like that. They recent dividends payout. They don't have the first quarter for 2020 yet updated, but it's roughly around 20 cents. Sometimes it falls below and rises back up to about 20 cents. But if you only paid $1 for it, shoot, can't knock the hustle. And I told y'all one of my portfolio building strategies, especially when we talk about stock and investing, was going after dividends. Those companies that bring, that pay you out. In the terms of what Nipsey Hussle would say, mailbox money, where you get that dividend, that residual income back. And one thing to also know, I am not a financial advisor, so I am not trying to influence you. I'm just giving you my opinion. I'm not telling you what to do or how to spend your money. I'm just giving you my opinion and giving you some tools and resources as far as definitions and stuff like that, that that I'm currently using, you feel me, to get an understanding of the game. So as we dive back in, we're talking to you about REITs. A lot of these companies varies too as well. I'm also investing into new residential. I want to say it's new residential trust and MFA financial. These are also REIT companies that build portfolio around residential, commercial, real estate, mortgages, home loans, and just other things like that too as well. So, and understanding that, what I've been learning and doing research, I think I feel like I talked about this in the previous episode too as well. That these right here are taxed differently because of how they are structured. So all the dividends I make from that is like making an actual purchase. So the taxes is different. You don't so you don't pay the same taxes on a REIT stock that you would pay like on like a 3M stock, because it's just a little different. And it's just different, just because the way that they're structured out. So that's something in particular to also think about, when it comes down to investing. But a lot of times these do have a larger payout when you start thinking about ratio, investing versus dividends. They always seem to have a larger payout and a lower entry cost. Some of them have a lower entry cost. You do have some that do have a higher buy-in cost. And then there's also websites out there to help you that actually track the dividends payouts quarterly, so you can see how they actually measure up. So another strategy that I was watching online, I forgot the guy's name. Hopefully in the next interview that we do, I shout you out, my guy. He was putting me on this little thing that he showed me where he was going back and he was looking at times where our economy hit the worst and see what companies like change their dividend payouts and how did they let that affect them. And he was just showing that like companies like AT&T, another company I'm invested into, we ain't gonna go into all that, but companies like AT&T was a little different. Now REITs, and I'm saying all that just to say that REITs is really depending on the real estate market. So you got to always be mindful that you are investing to the real estate market. So you got to be aware of what's going on. And a lot of these companies, so say I got New York Mortgage Trust, they might build their portfolios in a certain area. In these metropolitan areas, have a lot of high value. So as far as New York, you feel me? You build a portfolio in downtown New York, or, a portfolio in New York, you have millions and millions and millions and millions and millions, probably billions of dollars inside of these portfolios. So, just guessing, hypothetically speaking, I ain't going too far in depth, but they got billions of dollars into these portfolios just of real estate. Just as far as from real estate, they just built just strictly off of just playing in the real estate market, in the real estate game industry, as far as loans, ownership, collateral, all type of stuff. So long story short, it just understanding that. So keeping mindful of like that, like, damn, like that was one of the things I was like, I gotta keep mindful of that, because I understand that has an influence on the value of these stocks, is what's going on in the real estate, what's the new regulations and things like that that's being passed. So I have to start being more mindful, especially like I seen some with, especially with COVID-19, when they was talking about like the interest rates on the mortgages and stuff like that. I just started being kind of, a little bit more mindful about certain things. Like, all right, so how would that have an impact on these companies right here? And what I've been seeing is a lot of things kind of play hand in hand, especially with all the things that have been going on with like the oil and stuff like that. It's been shockingly that my oil stock has started to rise again, and it's going back up. So I see that some of these things, some of these behavioral things have an impact on the price of the stock, but I also use that to kind of have an understanding that these have a play also on the dividends. That sometimes when companies get into dire situations, they will have to cut off, you feel me, that flow of money to try to keep the reserves, to try to keep the company afloat. And some companies, because of how they are built, or just the loyalty to their shareholders, they'll pay the shareholders first. So yeah, that's something just to keep mindful of. But if you want to get into the real estate market and things like that, but just get an understanding of it, And I say this to just say, like, what I was just saying, like, actually, like, trying to learn it. You feel me? Definitions and things like that. The resources is out there, and it's ends, baby. We the voice of the culture. We're gonna always get more. Give you more information. You feel me? Oh, so going scrolling up, we're gonna go into the about. What is New York Mortgage Trust Inc. Common stock, also called New York Mortgage Trust, is a real estate investment trust which engages in acquisitions, investments, finance, management of mortgage-related residential housing-related assets. And then they got more information. They got a very, very, very long description. Its objective is to deliver long-term stable distribution to its stockholders over changing economy conditions through combinations of non-interest margins and capital gains from diversified investment portfolios, yada, yada, yada. So, long story short, that's just going into that, that aspect of it. About New York Mortgage Trust. I know I kind of did the yada, yada, yada at the end because now it was just going into just the sell you part. But I kind of just wanted you to get an understanding of what was the part that they were putting out there of what the company is. You feel me? It's an investment portfolio, comprised of residential, different assets and stuff like that, but I want to hear what your opinions are. Is there anybody out there that's invested into any companies like this on the stock market? You feel me? And those that are currently into real estate, how do you feel about these type of companies that are public? I heard one guy, he was just talking about how he didn't want to put, like, because he currently own his house, he currently flip houses, he work into the real estate market. He didn't want to also invest into that because he was saying it's all predicated all for one thing, the housing market. So he want to be invested into all those things. So he diversified his portfolio a little bit differently. For those that are out there diversifying your portfolio, I would like to get an understanding. Is this one of your ways? Is this a model that you're using? If so, what drew you in? And what some companies that you currently with? You can leave those opinions or your comments, how you may feel. You can shout your boy out or something like that. You can leave that in the comments below, and we will also have a link where you can leave a voice message. I love to hear your opinion, man. And if y'all want to help help keep this going, help keeping this research, help keep us investing and learning how we can all invest together, man, go ahead and subscribe, man. Y'all know where it's going. We show y'all where it's going, man. Go ahead and subscribe, and all this will be appreciated. You feel me? Go ahead and subscribe. It's your boy Bazz. We are the voice of the culture. This ends the family. And you know what I'm about to say. We out, baby. Peace.